Hello, it's Matt here. I just wanted to go over this free website that can help you track your annual income from shares and explain why low dividend yields don't matter at all. The downside to this website, though, is it doesn't track many stocks outside of the US. The website is called trackyourdividends.com. So I've put in some data in here, and this isn't all my stocks, it's just a few I have. But if you go to here, you can see with the data I've put in, my yield on cost is 7.21, which is higher than the current yield. So all that is this stock down here, for example, is AB. So the dividend yield on the current price is 10.21, but my yield on cost is 11.23. And that's just because the price is currently at $26 and I have an average cost of $23. But in the past, I've always been caught up on focusing on the dividend yield being too low. But what you've also got to consider is that the dividend yield will actually increase every year over time. For example, let's find a very popular stock everyone likes, AT&T. So, well, the yield's pretty high anyway at 6.38%. But if the company is able to grow the payout of the dividends at 5% every year on average, so for example, go calculator. So the yield is currently at 6.38. Well, next year will be 5% higher. And then the following year, this will be the yield, 7.01. Then the year after that, your yield on cost will be 7.33. And then so on and so on. And as you see, in the future, your yield on cost, if you were to purchase the stock at its current price, will be 9.88. So I don't think people should get caught up on the yield being too low. As long as you believe in a company and that it's going to continue to grow the payout of the dividends, it shouldn't really matter what the yield is too much. Now with this website, I think they pull the data from Yahoo Finance, and unfortunately I can't get all my international stocks on here. So it's mostly just the American stocks I have. There's one Europe one there. But so all you got to do is put in the ticker symbol, the amount of shares you have. It will auto generate the price of the stock currently. You will type in your average cost, your profit or loss, the current yield of the dividend payments, and your yield on costs will be just based on the price you paid per share. And then over on the far end column, you can see that it has an annual income, which is good. So here it's just showing, with the few stocks I have put in, it's showing that the annual income will be $689 a year, and portfolio here is 11,000, which is not my total portfolio. I think my total portfolio between 3 brokers is around 70,000. So the current yield here is just showing the yield of all the stocks you have, the yield it currently has if you were to buy all these stocks now. But over here is the yield on cost. So this is the true yield you have. This is the purchase price of all the stocks you have, and this is the percentage, the rate of return you will get for annual income. That's pretty high because this isn't all my stocks. There's a lot that I'm missing. That's just because I have a few growth stocks that don't pay out any kind of dividend. But I do try focus on mostly dividend stocks. So I hope you find this website helpful, and I'll see you in the next video.